just completed a double top retest here on an extraordinary bearish volume divergence, and the end result was a very clean-cut rejection to the downside after the failed retest, and therefore the situation had turned from what I should say a trading range of multiple weeks to possibly the start of a down move. So we did a little bit of a pause last night, and we ended up pretty much undecided at the closing of the overnight. But as soon as the day started, we got a clear-cut rejection on the downside, which met support at 2099, and rotation back and forth started. But since we heard that the decision in favor of Obamacare came out and we were supposed to see a rally generated by the healthcare industry, that rally failed, and as a result rotation took place below our opening, which resulted in a later day break to the downside. The close has been pretty negative because we closed at the very bottom range, and now as long as we remain below 2100, we should see continuation down. First downside objective should be 2089. After that, an extremely important level of support, 83.5 to 80. Up on a break of 2080, we could see the ground shake a little bit harder than usual. So that's a level we definitely want to put on charts and keep a close eye on. If we retrieve back and cross back towards 2099, then big possibility that a short covering rally should propulse us towards 2108 to 2110. So these are the numbers for ES. Now let's look at CL. To be honest with you, based on what is happening, I cannot say at all anything bearish is taking place. Obviously, the market was extraordinarily ahead of itself, and a lot of the bad news in terms of excess supply, OPEC not cutting production, etc., didn't have any kind of impact on price coming down, and it was staying extremely resilient to the upside. So finally we saw some profit taking, but as we are coming down here, there is absolutely zero rush to the sell side. If we were, profiles would not be this tight. Therefore, one can definitely start to conclude that possibly a very short-term support is building itself up here, and that possibly another retest of those highs could be in the picture. Right now, more than anything, I believe that crude is very sensitive to the relationship between US and Russia, more than OPEC, more than Middle East, more than any of that stuff that is always oil related, but that's what they are looking at. If tensions continue to grow, which they are as we speak, we could definitely see a little bit of upside pressure coming on crude. So if we do not see further signs of liquidations down here, one must start to become kind of careful on the short side. Upside resistance, first 60.5. If we clear that, then there is really not much before we would hit 61.15 area. And of course the two levels up there are the most recent extreme high, which I called for, which has so far contained exactly the high. So that's about it for today. Thank you for listening. It was Reza with Profiletraders.com. You wish to learn my courses and join my trading room for a year, you can get the deal at my website, $550. Have a great evening.